What's going on, Penny boys and gals? It's your boy, What the Duck here, also known as MetaMatt, and welcome to PBU LITE class number 24. Make sure to check the description of this video for the class handout. This class will be all about how to preserve your money in volatile markets. So this is a challenging topic, but an essential one for anyone who wants to succeed in trading. To help illustrate some of the strategies that we'll discuss, I'd like to take you back in time to a period of history when uncertainty and risk were not limited to the stock market. I want to tell you the story of a military commander who faced a similar challenge: how to preserve his troops and his resources in the midst of chaos and danger. The commander I'm talking about is none other than Sun Tzu, a legendary commander from ancient China who wrote the classic book on military tactics, The Art of War. You might be wondering what this has to do with trading stocks, but bear with me. As we'll see, many of the principles Sun Tzu used can be applied to trading as well. Sun Tzu lived in a time of constant warfare, when various states vied for power and territories in China. He was a master of strategy and tactics, and this book remains one of the most influential works on military theory to this day. But what can he teach us about trading in volatile markets? Well, first, let's consider one of his most famous quotes: "All warfare is based on deception." Now, at first glance, this might seem like an odd thing to say in the context of trading. After all, isn't trading supposed to be about transparency and honesty? Well, yes and no. On one hand, it is true that trading should be conducted fairly and ethically, but on the other hand, there's no denying that the stock market is a competitive arena where everyone is trying to gain an advantage over their rivals or over their fellow traders. In such an environment, it can be useful to adopt some of these tactics that Sun Tzu suggests. For example, he advises commanders to deceive their enemies by appearing weak when they are strong and strong when they are weak. This means that traders could benefit from hiding their true intentions and keeping their cards close to their chest. By doing so, they might be able to manipulate the market in their favor and avoid losses. So this is a common strategy used by unethical pump and dumpers or market manipulators. We're not going to use those tactics because we are traders, not scammers. However, it is important to keep in mind that there are a lot of people out there who are bad actors, doing exactly what Sun Tzu suggests, which is deceiving. This is why it's important to have a clear strategy in place and be disciplined in following it, as opposed to following bad actors or pump and dump posts that we see on Facebook, Weeble comments, or StockTwits. Sun Tzu emphasizes the importance of knowing oneself and one's enemy and adapting one's tactics accordingly. So traders need to be aware of their own strengths and weaknesses as well as those of the market. They need to be able to adjust their approach to the market as the market changes and avoid emotional reactions to these sudden changes. There are certain catalysts or strengths and weaknesses of the market, such as earnings, stock splits, and other events that traders can become aware of, not only the existence, but also know how it affects the market. Another key aspect of Sun Tzu's teaching is the concept of winning without fighting. This might seem paradoxical in the context of warfare, but it makes perfect sense in the context of trading. Essentially, what he means is that the best way to win is not necessarily to make aggressive moves, but just to outmaneuver your opponents through skill and strategy. So you don't need all the indicators in the world, just the ones that work for you. So for traders, this might mean looking for opportunities to make small gains without taking on too much risk. It might also mean being patient and waiting for the right moment to strike rather than jumping into a trade impulsively. It might mean avoiding herd mentality and following one's own instincts instead. In the end, the lesson that we can learn from Sun Tzu and his Art of War is that trading, like warfare, is a complex and dynamic environment that requires careful planning, clear thinking, and adaptability. By understanding the principles of strategy and tactics, traders can improve their chances of success in volatile markets and minimize their losses. But how exactly can we apply these lessons to our own trading strategies? Let's consider a few specific tactics that Sun Tzu might suggest for preserving our money in uncertain times. One strategy is to diversify our investments. This means spreading our money across different stocks, sectors, and asset classes in order to reduce our exposure to any one risk. By diversifying, we can protect ourselves against sudden market shifts or company-specific issues that might negatively impact a single stock. Another tactic is to use stop-loss orders. These are orders placed with the broker to sell a stock automatically if it drops below a certain price. By setting a stop-loss order, traders can limit their potential loss if a stock suddenly tanks. A third strategy is to pay attention to market indicators and technical analysis. By tracking trends, patterns, and other data, traders can spot potential risks or opportunities before they become obvious to everybody else. This can help traders make more informed decisions and avoid making impulsive moves based off of gut instinct or emotion. These are just a few examples of the kind of strategy that traders can use to preserve their money in volatile markets. Of course, there's no one-size-fits-all approach, and every trader will need to find their own balance of risk and reward, but by studying the lessons of history and learning from the wisdom of great strategists like Sun Tzu, we can improve our chances of success and safeguard our financial futures. Now, of course, Sun Tzu was not diversifying his portfolio, but he was diversifying his army between cavalry, infantry, and even archers. He might not have used stop-loss orders, but he knew that in order to win the war, he might need to retreat from a battle or two if his plan was not going according to his favor. And he might not have been using technical analysis when it comes to the charts, but I guarantee you he was studying his opponents as well as himself each and every day. In conclusion, trading stocks can be a challenging and unpredictable endeavor, especially in volatile markets. But by adopting some of the tactics and strategies we've learned from military commanders such as Sun Tzu, traders can minimize the risk and maximize their returns. Whether it's through diversification, stop-loss orders, technical analysis, or other methods, the key is to be disciplined, adaptable, and strategic. With these principles in mind, we can navigate even the most turbulent markets and emerge with our money intact. Be sure to check out the rest of our free trading classes on the YouTube and the Discord. I hope to see you there, but until then, as always, I hope that you all make some bread.